Mohnish Pabrai just backed up the truck and loaded up on a lot more shares of Alibaba. Perhaps this is no surprise to anyone because Pabrai in a recent talk said that he was still buying Alibaba shares. And well, what we're supposed to take away from that is that he still really likes the company. In this video, I want to talk about some of my key takeaways from Pabrai's changes and why I think it's important that he added more to his position in Alibaba. After that, I'll dive into the actual changes in detail that he made to his portfolio. If you've been following Pabrai's changes to his recent 13F, let me know in the comments below because I think it's a pretty big deal, but I want to hear what you all think about Pabrai adding over 50% to his holdings in Alibaba. Before diving into the actual changes of the portfolio, I want to discuss a little bit about why I think these changes are significant for Pabrai based on his past history and some of the ways that he actually manages his portfolio. The first thing I want to talk about is the notion of position sizing. Now, Pabrai in his Pabrai Investment Funds uses a strategy of making 2%, 5%, and 10% bets, where his highest conviction bets will be in the 10% range, and less conviction bets would be in the 5% range, and then small bets, of course, are in that 2% range. This excludes what Pabrai said he actually does in his personal portfolio. He says that most of the time he has no more than 3 stocks in his personal portfolio at any time. So he's very concentrated there. And that's not to say that Pabrai Funds isn't concentrated. He usually doesn't have more than 10 positions, and right now he has 9 positions in that portfolio. The 2% bets are actually pretty rare for Pabrai. And since I've been following Pabrai, I actually haven't seen him make any of these 2% bets. Now, back during the Great Financial Crisis, when Pabrai said that there were orgasmic times in the markets as far as finding value, he made a basket of bets into commodity companies. So he made a basket of these 2% bets in a bunch of extremely cheap commodity companies, and that turned out really well for him. But more recently, he has not made bets in his lower conviction ideas. Now, the 5% bets are a little more common. Most recently, he has made bets in Shinnikin, which is a Japanese company, and while that hovers at about 6.5% of his portfolio, we can round that to be about that middle ground of 5%. Now, that could be because he doesn't have as much conviction in that company, or it could be because he simply couldn't acquire enough of that company in the open market. And also because he's changed his philosophy a little bit, where he is looking for these long-term compounders. Just because the bet size isn't very big doesn't mean that he doesn't have a lot of conviction in the company. For instance, Resus Logistics, he bought a third of that company in Turkey. However, it barely makes a dent in his portfolio. I think it sits at under 4% of his total portfolio, but if you've heard him talk about it, he absolutely loves this business. So for me, it makes a lot of sense to think that now most of his bets are in companies that he has high conviction in. And sometimes if it's on the lower end, it might just mean that the company is too small and he's actually looking for those companies. But the 10% bets are the true sweet spot companies for Pabrai Investment Funds. If he puts 10% of his portfolio into a company, that's a fully sized bet. Now, I don't know if there's an actual mandate within the terms of his investment fund, but Pabrai really prefers to run a 10 by 10 portfolio, and he rarely puts in more than 10% of his fund into a single company. Now, this case with Alibaba, this second round of investment into Alibaba, puts him above 10% within this company. And when I'm talking about 10%, I mean basically the initial upfront cost basis of the investment into Alibaba. Pabrai, of course, has no problem letting a single position grow to a huge portion of his portfolio. For instance, Micron is currently sitting at about 30% of his entire portfolio, and before he trimmed back in that position last quarter, it was over 40% of his portfolio. Last quarter, back when Pabrai purchased his first stake in Alibaba shares, I think his total position size was about a 7 or 8% of the Pabrai Fund's total portfolio. But the share price of Alibaba has gone down over time since Pabrai has bought into the company, and the mere fact that Pabrai has purchased over his typical 10% bet stake in Alibaba is a huge green flag. And it's pretty clear that a company like Alibaba is not going to have the same return profile as potentially a micro cap company that's starting at $50 million in market cap that could potentially grow to multiple $1 billion company. but it's pretty clear from this re-up of Alibaba shares that Pabrai is really willing to swing for the fences with Alibaba, especially considering the fact that the price continues to get more and more attractive. So the second purchase of Alibaba actually makes this position the largest, what I would say, cost basis position that I've ever seen Pabrai make. So I love the fact that from a conviction standpoint, he's added a lot to his current share in his ownership of Alibaba. Another lesson that I'm thinking about from this is the fact that with a lot of investments, we do actually get the second chance at bat. So in this case, Alibaba was available for purchase for Pabrai at a very reasonable price, enough so that he was initially willing to take a 7 or 8% bet in the company. And the fact that the price in Alibaba has actually gone down since then is actually a bonus for us as investors if we actually believe in the fundamentals of the business. So for Pabrai, this was another wonderful opportunity to continue to learn about Alibaba and take another swing, another crack at the apple, as you might say. I'm a big fan of looking into these companies that the super investors are buying because it's already passed through one excellent filter of a brilliant investor's mind. Just because a super investor has purchased a company does not mean that it's automatically going to shoot up in price and the market is going to recognize this huge gap between intrinsic value and current market price just because a super investor has purchased it. In this case, it's the exact opposite. All of these super investors are buying Alibaba and the share price keeps going down. And I bet for a lot of these super investors, this is a wonderful thing. And we might see a lot more purchases of Alibaba showing up on the next quarter of 13Fs. So basically, the lesson that I'm trying to take away is that sometimes there will be another shot at purchasing a company. So if you aren't comfortable with the fundamentals of a company, and for instance, Alibaba is huge, it's complicated, there's a lot of risks perceived and possibly unperceived, and it takes a while to get comfortable with these investments. So just because we're seeing investors like Guy Spear, David Tepper, Mohnish Pabrai all buying into Alibaba, it doesn't mean that you're going to miss out on the opportunity. And in this case, the prices continued to go down. Now, obviously, this isn't investment advice, but I would wager that the price continues to get more and more attractive to people like Mohnish Pabrai. For me, I'm learning that, especially with Alibaba, I don't need to rush my understanding of a company because there might be opportunities where I can get these wonderful businesses at prices way cheaper than what the super investors are paying for the businesses first. So yeah, I bet Pabrai is kind of happy that he didn't make a full 10% bet during his initial purchase because the price has continued to decline. Now, I will be very interested to see if he buys even more in the next quarter. And of course, that's all speculation. And like I said, that 10% cap is, there might be a little wiggle room there, or there might be a mandate where he can't go much above that in the terms of his investment. So we'll see what happens there next quarter. Yeah, I don't want to speculate too much, but it does seem that he really loves this business. And it would be a shame if he couldn't purchase more, even if he wanted to. All right, let's dive into the actual changes to the portfolio this quarter. I'm gonna hop on over to Ticker Terminal, which I have a referral link in the video description below if you want to sign up for free. So the main change to the portfolio this quarter was, of course, his change to Alibaba. The company is now almost 12% of his total portfolio, and he actually added a whopping 53% to his already existing share of Alibaba. This isn't that relevant, but it's kind of interesting to think about the sheer scale of Alibaba, is that Pabrai only owns 0.01% of all shares outstanding of Alibaba. But even with such a small stake in the company, I bet Pabrai is thinking like an owner of this business, that he is a passive owner of Alibaba, and he's going to let management do the work. There were no changes to his largest holdings in Micron and Seritage. He did make a few changes to his positions in some Indian companies that he owns. For instance, in Edelweiss Financial Services, he sold off almost 20% of his total stake. Now, this company is very different in size to Alibaba. As you can see, he owns almost 5% of all the shares of Edelweiss. And even after this almost 20% sell-off, this company still makes up 9% of his total portfolio. So I don't think he is necessarily losing faith in his conviction for this company. He might have just needed to free up some capital, for instance, to increase his stake in Alibaba, which is now his fourth largest holding in his portfolio. And he made another small change in his position to Suntec Realty. He added about 3.5% to his stake in that company, and he owns about 4.5% of that company as a whole. So it's pretty amazing to see that he's made the second largest company in China and one of the largest companies in the world 12% of his overall portfolio. To me, this screams high conviction, and I know Pabrai has been harping on and on about the power of these long-term compounders, sort of the set it and forget it method of buying these wonderful companies and just letting their value compound over time. So clearly he's found one of these in Alibaba, and he's basically making a bigger bet on Alibaba than I've ever seen him make on any other company. So if Pabrai is right, I'd expect this company to stay in his portfolio for a long time to come, because he clearly thinks that it has a great value and that it has a long compounding runway ahead. I personally tend to agree with him on that front, so I'm hoping for the best for his position in Alibaba. Well, that's about all I had to say for Mohnish Pabrai's portfolio updates for this quarter. Alibaba is still a very interesting company and an interesting stock, so it's wonderful that Mohnish Pabrai sees more conviction in his bets and again made a pretty hefty addition to his position in Alibaba. But if you want to learn more about Alibaba, then you might want to check out my video over here where I did a collaboration with Investing with Frank talking about the business of Alibaba. Please like the video and subscribe to the channel if you want to stay up to date with more videos like this. I will be releasing a few more videos covering the 13F filings of super investors for this most recent quarter, so be on the lookout for those videos. Thank you so much for your time. I really appreciate you watching this all the way to the end, and I will see you in the next video.